Welcome to the Building Web3 podcast. And my good friend Sam, he is the head of product and institutional business development. Now, before we get too deep into BitMEX, tell me a little bit about your background. How did you get into this wonderful world of crypto?
Like a lot of people in crypto my age, originally a TradFi. I spent 17 years working across a bunch of derivatives desks at a bank, initially working in FX in London on the trading side, and then I moved into structuring and gradually moved around the globe. I worked in Dubai, I worked in Hong Kong, I worked in South Africa, and eventually brought myself back to London. A lot of the time doing derivatives solutions for customers. Those range from a retail platform for wealth management through blue chip corporates all the way up to working with local governments, particularly in Africa. And that kind of went on for 17 years and kind of started being more of the same thing every year. You knew what trades you were going to do. You knew who you were going to do them with. You knew you didn't want to do too many because there were budgets to stick to. And after a while, that started to feel a little bit same. So end of 2018, I started to look for other things. And beginning of 2019, I came across the guys at BitMEX. And I didn't know very much about crypto. My initial encounter with crypto was just the team assistant opposite me who would talk about how the Bitcoin that she bought had gone up and she'd made £20, £30 over the weekend. I was super excited. A lot of us at the time thought it was a bit of a scam. We were probably quite wrong. And so I met the guys at BitMEX. They were pretty much near their peak. They were already the biggest crypto derivatives exchange in the world. And they talked a language that I knew. They talked TradFi language, but they were applying it to crypto. So these were finance guys who had come into Bitcoin as opposed to a lot of other places, tech guys that come into Bitcoin. So we were very much on the same page talking around the challenges of running an exchange, the directions we could go, and some of them we have taken and some of them we ended up not taking. And we've seen some other exchanges in the market doing those directions as well. So my background of working in derivatives and options seemed like a natural fit to what these guys were trying to build. And I took the leap in 2019. I got, in the same week, got married and joined BitMEX. And it's been a wild ride ever since.
Congratulations on that. Well, tell us a little bit about BitMEX for people that are unfamiliar. Tell us about the mission and kind of some of the core differentiators.
So BitMEX likes to call itself the OG derivatives exchange. It was the first platform to do derivatives properly. And where did this come from? Why did BitMEX actually kick off, and why did the founders start it? If you go way back in crypto history, there was an exchange called Mt. Gox, which famously failed, and the recoveries of that are still coming out this year. And so the founders of BitMEX wanted to build a solid derivatives exchange where people who had opinions on the market, had risk they wanted to hedge, wanted to take positions, could trade safely and securely. And so the first thing to do that right is you've got to make sure that your coin is safe. And they did this with Bitcoin, and they stuck to Bitcoin for a very long time because they knew how to keep Bitcoin safe. Other coins, not so much. Bitcoin, by process and by technology, they knew how to keep safe. So that's where they started. And they wanted to build an exchange where traders are the focus. BitMEX is not an exchange for the faint-hearted. BitMEX is not for green investors who want to hold $100 worth of Bitcoin and do nothing with it. It really is a trading venue, and we mix professional traders with absolute amateurs, and the amateurs have to learn. Otherwise, it's going to be quite tricky. We help them along the way. We have various ways to educate our traders as they come in, but it really is a proper trading market, and we see that with our mix of about 2/3 of institutions and 1/3 of retail customers. So what does the exchange actually offer? And what are the key principles? Efficiency, fairness, and transparency. We need our traders to understand that everything we do will follow a set of rules. Those rules are easy to observe. Everything adds up. Everything makes sense. There aren't any kind of situations where money goes missing, where things don't line up as you expect them to. So the core after custody is a trading engine that is really mathematically very, very secure. And you look at the people that have worked in BitMEX over the last 10 years, and a lot of them come from mathematical engineering and science backgrounds, they really get the maths. The maths is a very tight, closed system. So we've got our custody right. We've got an engine system that doesn't lose money, and we can talk about exactly how that works a little bit later. The last bit is the broker. So the broker is a system that determines whether a customer can put a trade on or not. Does the customer have enough collateral to put that trade on? And what happens when that collateral runs out? We think we run this very tight. Sometimes, and there's lots of accounts that follow the liquidations on BitMEX. Sometimes people run out of coin, and in a traditional world, you would get a call, you'd get an email, you'd get something to say you're about to run out of your margin. If we did that in the crypto space, the timing to get that done doesn't really work. We can't wait 1 hour because the price of Bitcoin can move to $5,000, $10,000 within that 1 hour. So we actually take action straight away, and we take that position away from our users and take the margin away from our users. All part of the way the platform is initially set up, but we find that's the most robust way to keep trading for both sides. So the winners and the losers on a particular trade, to keep it even and to make sure that works. The other thing we try and do is we make trading as accessible as possible. You can trade with as little as $100. The KYC process is relatively fast to sign up. You can get going within an hour if you have the right documents, your passport, for example, or your ID card. But while we make it easy to come in, we don't compromise on getting the details right. The details are really, really important. Looking across the industry, where people have gone light on the detail, they have had big issues later on, and people have lost a lot of their customers, particularly money. Names like FTX obviously spring to mind, but that detail is super important to us. The last bit, the last focus that I'd like to mention for who we are is we're really Bitcoin focused, and we have been since the beginning. We have now custody of about 20 different coins, but our trading takes place 85% margined in Bitcoin. It's a little bit heavy compared to the rest of the industry, and we're working on that and trying to get some more diversity in there. But Bitcoin maxis come to BitMEX because it's the best place to trade Bitcoin denominated contracts, and has been for the last 5+ years. So we focus on Bitcoin, but we start to do everything else as well.
So you mentioned Bitcoin contracts and then kind of being the OG derivative platform for people that aren't as deep in the weeds of being, more of an institutional trader. Talk to us a little bit about, some of the things available. So it seems like perpetuals, contracts, futures. What is on, the exchange?
So if we use the historical timeline to help us here as well, BitMEX started with futures contracts, and futures contracts originate in traditional finance, and it allows you to take delivery of a certain asset on a particular date in the future. So if I think that the price of pork bellies is going to be going up, and I need to buy pork bellies sometime in the future, let's say at the end of September, I will buy a pork belly future, and that delivers that pork belly to me. And the same was applied to crypto. So dated futures, as they often get called as well, are the first place where BitMEX started. It will allow you to buy Bitcoin at a certain price for settlement on a future date. And this is where everything started rolling. People would hedge themselves or speculate on the price of Bitcoin on a particular date. But it's quite clumsy because once you get to that date, your position is gone. And a lot of our traders really wanted a constant position. They wanted to be long Bitcoin, they wanted to be short Bitcoin, but they didn't want the operational hassle of every time closing out a trade, putting on a new trade, closing out a trade, putting on a new trade. And this is where the big BitMEX invention comes in. So BitMEX invented a product called the Perpetual Swap. And what the Perpetual Swap really is it's a string of futures that roll every 8 hours. So instead of closing out and having to go back into the market and put a trade on, the trade continues, but there has to be some sort of compensation for one side versus the other. The reason for this is that the perpetual swap is a way to get exposure to an underlying asset. And usually, let's talk about Bitcoin against dollars. That underlying asset trades somewhere else in a spot market, and we'll come on to spot markets in a little bit. But somehow those markets have to be linked together. If you just allow a swap to keep trading, It's just a number on a screen. There is no direct relevance. So what we do is we tie back the price of the perpetual swap to the spot market by something we call funding. So funding is exchange between people who are long Bitcoin, so that they want the price to go up, and people who are short Bitcoin who want the price to go down. It's exchanged every 8 hours in order to incentivize. It's like an elastic to incentivize the price of the perpetual swap and the price of the spot market to come closer together. Now, initially when this started, the spot markets had more activity. They were more liquid than the derivatives markets, the perpetuals. For a long time, it's been the other way around. So in some ways, the perpetual prices lead the spot prices, and there's more activity there because it's more capital efficient to hold a derivative rather than a spot position. But the key point here is that these two markets are tethered together, excuse the pun, such that they can't diverge, and the perpetual actually represents eventually the price of what the Bitcoin spot markets are doing. So the perpetual swap is our biggest contract. We have 99 of them at the moment. We'll probably list number 100 again next week. We've been past 100 before. We'll kind of delist and relist depending on customer appetite for the underlying assets. But it's very simple for us to get them going. We need a spot market somewhere else, and crucially, we mark our prices to external spot markets. So BitMEX itself cannot in any way manipulate the perpetual swap prices on its platform, which in other venues, they use their own spot markets. If there's a problem with those spot markets, their perpetuals are influenced for that. So we're very, very clean about that. Wherever possible, we don't use our own spot markets for pricing our perps because we want to keep that separation. We do have spot markets as well.
And for people that are less familiar with perps, and I think that was a great explanation, talk to them a little bit about what are some of the really popular perpetuals on there, because you talked about how you'll delist some, rebring some back based on investor appetite.
So Bitcoin is obviously the most popular contract for us. We call it XBT USD. BTC is the preferred name across the market now, but XBT is where we started off, a bit like XAU for gold. ETH is our second one, Ethereum being the second biggest chain available in the blockchain space. And then we start to diverge. So XRP used to be a very big contract for us, but we've since recently seen more meme interest. Things like Pepe and Doge are actually quite active contracts for us. There's a certain degenerate part of the BitMEX community that love to trade slightly more active things, and we offer relatively high leverage on those. On Bitcoin, we offer up to 250x, but on Pepe and Doge, we go up to 50x, which we think is risk appropriate. Other than those, we're starting to see, we've seen a lot of interest in Solana. Post the FTX collapse, that died down a little bit, but Solana is now our third biggest underlier as well. So we trade for those big coins, we trade spot, we trade futures for some of them, and perpetuals as well.
And I remember reading somewhere, and this could be entirely wrong, is that there's an insurance fund that BitMEX has to help protect traders from losses in extreme market conditions. Can you talk a little bit about that? One, if that exists, and two, if it does exist, how does it work?
Yeah, so the insurance fund is or has been born out of a way to protect initially the exchange and then its customers, and it works for both. So if I put a trade on, I put down some margin. So let's say I have a 10x position, a price of $100, I'll put down $10 in margin, and I'm buying the underlying swap. If the price goes down, my margin starts to get used up. That margin is divided into two things. There's first of all what in traditional finance is called a variation margin. How far can my price move before I get a margin call or a liquidation? Let's call that $5 right now. So price starts at 100. If it goes down to 95, then I'm hitting liquidation. The position needs to be taken off of me, but I've put down $10. There's 5 left. That $5 goes to the exchange to try and get out of the position. So the exchange takes over the position with $5 remaining. So price is going down from 100 to 95. If the exchange can get out of the position before the price hits 90, it will retain some of those $5. If it's below that 90, then we have a problem because there's not any money left. That position is now bankrupt. If there's nothing else going on the exchange itself is bankrupt. So we need something past that liquidation price, bankruptcy price, that $90, that will protect the exchange and will protect other users to guarantee their profits. Because someone else, if I've bought at 100, someone else has sold at 100, they're expecting their profits back. We gradually built up a pool called the insurance fund, which basically steps in the way. So instead of having $5 left until my bankruptcy price, I now have $5 plus about $2.1 billion equivalent of Bitcoin that's sat behind that. That's a very big number. That has been gradually built up over time by whenever the insurance fund or whenever the exchange manages to exit the position before it loses that remaining $5, that goes into the pot of the insurance fund, and that keeps accumulating. We vary that number, that $5 margin, which we call the maintenance margin, we vary that by contracts from time to time to try and keep the insurance fund relatively stable. In some contracts, we need to grow the insurance fund because we don't want particular contracts to have to be subsidized by our bigger contracts. When they start, that's fine, but after a while, we need to allow them to work on their own. So we have a lower leverage, a high maintenance margin for those contracts so that they can build up their own allocation for the insurance fund. It is something that it's a volatile number, 37,000 Bitcoin right now. It can swing around quite a lot, but the idea is there is enough there to cover paying out profits to any customer on the platform at any time. And as the open interest, which means the total number of contracts traded that are live on the platform, grows, that coverage reduces a little bit. Right now, we've got very good coverage. If we were to multiply our open interest by 10, that coverage starts to reduce. But if you multiply your open interest by 10, you also expect the liquidity on your platform to have grown. Most of the time, that will be true, such that the risk to the insurance fund, which is really, I've got to exit a position. Is there someone who wants to take it off me? How far away is that price from the current market? How much is that going to cost me? That risk goes down at the same time. So we think the insurance fund is pretty well stacked. We are probably the second biggest insurance fund in the market after Binance. And we like it that way. We think it provides a very safe environment for customers to make sure they get their profits when they make money, and a safe environment to make sure that the exchange itself doesn't really run the risk of bankruptcy anytime soon.
Yeah, so you talked about, even just now and before, some security measures you guys had in place. Talk to us a little bit about the custody problem, because obviously like an FTX, a Mt. Gox is the worst case scenario many people can have. So talk to us a little bit about how you prevent and secure user funds.
So our original process for keeping user funds safe was that all withdrawals came through the three people that could trust each other, who were the founders. So every day at 8 p.m. In Hong Kong, 2 out of the 3 founders would go through the whole list of Bitcoin withdrawals. They would check them. They would make sure that they're okay. They would, in separate places, have their key shards, which would allow them to process the withdrawals to different customers. That mindset continues, but now we have real-time withdrawals for most assets. So we keep 95+% of our coin in a cold wallet. That means there's no automated access to it. There's a small number of people who have keys to move that around. And that's kind of our cold storage. At the same time, we want to be able to process withdrawals in real time for sensible amounts. If someone wants to withdraw 1,000 Bitcoin, they will understand it takes some time. If someone wants to withdraw 200 Tether, they probably want that cash or that coin right now. So we hold some of our funds in a hot wallet where we can automatically process withdrawals, but those keys are still held in different locations. So we have a system through our partner Fireblocks whereby each withdrawal is risk checked, and then it is processed, if it can be automatically processed through the same setup of having keys shared across multiple locations. So those keys combine to allow the processing of each withdrawal. And if there's something that is flagged for, could be any reason, could be an unusual withdrawal from a user who hasn't withdrawn for a long time, could be a large amount, could be someone's tried to withdraw 10 times in the last hour, then it goes through a manual review. We still believe that human minds are the best way to sniff out things that are potentially incorrect, are potentially trying to hurt the platform. So anything that gets flagged then goes through a manual review. That sometimes causes frustration with users, but it doesn't seem to be extreme market conditions that flag a lot of these things. A lot of these things are fairly well distributed across time, so we think we process things fairly quickly, and we're a lot faster than what we used to be, which was once a day.
Now, and before we go on to our next question, I want to share an exciting thing from our sponsor. So if you're a Web3 organization like an Arbitrum, Optimism, Solana, any big foundation looking to launch their own dedicated podcast channel, we can help you out. We've recently launched one for Zero Gravity, launched their podcast on specifically decentralized AI. So with our Done For You service, they're now producing 4 episodes a month with top-tier guests, boosting their business development and solidifying them as an authority in the AI space. So our team takes care of everything from booking guests, crafting questions, to handling production and distribution. So if you're interested in getting 4 to 6 qualified meetings per month with our podcast funnel, do reach out to us. If you're ready to elevate your company and foundation, visit jaxdwyer.com, just my name, to book a free strategy session, and let's make your podcast a reality. All right, now back to the show. So let's talk a little bit about the trading fee structure at BitMEX. Like, you guys are obviously working with large institutions. I assume you guys are focusing on lowering fees and trying to get like more high volume traders, but talk to us a little bit about how the fee structure works.
So again, diving into history, BitMEX was famous for having a very fixed fee structure at the beginning. It was the only show in town, and it kept the fee structure very, very solid, very fixed for about 5 years. That fee structure was to have 7.5 basis points paid by the taker on a trade. So the taker is the person that says, "Oh, I've seen a price on the order book. I like that price. I'm going to buy. I'm going to sell." The maker, who's the person that leaves a price on the order book, and there's some risk involved in that. The market can move against you while your order is in the order book, received a rebate of 2.5 basis points per trade. So that minus 2.5 plus 7.5 fee structure was really good at incentivizing liquidity back in the day, because there is a risk of putting things on the order book, and it compensated people for that risk. We've evolved things slightly since then. That rebate has fallen away a little bit. We find that there are now professional market makers that can make prices without such a large rebate. So we've scaled that down a little bit, which has allowed us, for many customers, to also reduce the taker fee. So right now, on our USDT margin contracts, we have a rebate for everyone of 1.5 basis points, and we have fees going from 7.5 taker down to a minimum of 2 basis points taker for the USDT. For our Bitcoin ones, it's slightly different. We have a best case fee of minus 1.25 rebate and plus 1.75 taker. And again, the top tier, the entry tier, is 7.5 basis points taker. But how do you get from the entry level fee of 2.5 basis points down to the best case fee? And it's really doing things that are beneficial to the exchange and to other users. So by providing liquidity, by trading a lot of volume, there are fee reductions. And a lot of this is available on our fees page. What we're working on right now is a way to spread this out to slightly smaller traders. The current structure is very focused on people who trade over $1 million a day. It's not that hard to trade $1 million a day, but you do have to basically spend time doing it, or you have to have a sophisticated automated solution. So we're working on the retail side right now and expect to make some changes probably in October around that. But more volume you trade, the more market share you have, and the more liquidity that you provide to specific contracts where the exchange needs them. So if you provide liquidity to our top tier contracts, it's already there. We don't reward people very much for that. If you provide them to entry level contracts, we work either with market makers who will get their own specific rebate for doing that, or with general retail traders who can earn better fees by providing what we call adjusted market share. So we calculate the market share across each different contract. We weight the least liquid ones much more heavily than the most liquid. That comes up with an adjusted market share. And if you get over 10 basis points of that, then you start to go into fee discount territory. So even on a retail level, We have a few small retail traders that can get into that very quickly just by deciding to quote pairs that other people aren't doing. The last bit is with the BitMEX token. So the BitMEX token is BitMEX's utility token, and you can get two things. You can get fee discounts from the start by staking as little as 100 BitMEX, all the way up to staking 1 million. So you buy BitMEX in the open market, you stake it, which locks it up such that you can't get it out for 2 weeks, and that keeps rolling. And while that BitMEX is staked, you get discounts, you get guaranteed fees as well. So even at the entry level, you drop from 7.5 to 7 basis points to 6 basis points very quickly. So BitMEX is probably, for a retail trader, the best way to jump in. Equally, if it's retail traders coming across from other platforms, if they reach out to our customer support team, we are often able to give fee trials, so fee reductions for a specific amount of time as people ramp up their trading on BitMEX, and on the institutional side, even more so.
Yeah, and let's talk a little bit about some of the pro trading features, because I know you guys have a bunch of well-defined tools to enable better trading, like dashboards. Talk to us a little bit about the features you guys give to professional traders.
So we introduced trading off the charts about 6 months ago. That's something that has been very popular for people who've seen it in other platforms. But I think the most exciting thing we've got right now is actually in our options offering. So we started offering options about 4 months ago through a partner called PowerTrade. And what they offer to our customers, which I think is really exciting, is what we call the strategy selector. So options can be a little bit overwhelming. I've worked in them for 20 plus years now. So for me, it's kind of day to day. But the first day going onto that options desk was pretty overwhelming. And we feel that our customers feel the same thing. So what we wanted to do is put something together that allows them to craft a strategy. I think Bitcoin's going up, but not by more than 20% in the next 3 months, in the next 1 week. What's your view on the market, and how can you then express that through an options trade? And what does your potential outcome look like for that? So it's not looking at institutional traders they have their own systems to do this. It's really providing the mechanics for people to analyze what trades they can put on, what the outcome would be, and are there any alternatives. It's in the first phase for that, and we'll couple up something else we're working on, which is around analyzing users' trading behavior. And again, we have a partnership there through surprise, through AI. We are analyzing customers' trading behavior, and we can feed back, this is what you did well, this is what you did badly, this is how you can improve. It's in a trial beta phase at the moment, so it will take a little while to filter through, but we'll offer that to our VIP customers initially, and then eventually make that available to our full-on retail. And I think that's really important, because if you're trading on your own, there are BitMEX communities and other communities where people do learn, but if you're trading on your own and you don't know what's going on, you can make one day and then lose, and then you're gone. And we want our customers to be as profitable as possible and stay with BitMEX for the long run.
Absolutely. And you mentioned some future features that would be coming to, I guess I'll call them more retail traders. Talk to us about some upcoming features and improvements that the community at large can look forward to from BitMEX.
The big one we've been working on for a long time is what we call multi-currency margin, and it's something that has been around in the market for a long time. Our focus on Bitcoin meant that we've stayed away from it for a while, but we realized that it's very important for both our retail customers and our institutional customers. Right now, BitMEX has 2 sets of derivatives margined contracts. There's Bitcoin margin, there's USDT margin. You can only use Bitcoin for the Bitcoin margin contracts. You can only use USDT for the USDT margin contracts. That's fairly restrictive, because if you want to hop one contract to the other, you have to go, oh, I've got my Bitcoin out. I need to sell my Bitcoin. I need to get my USDT. I need to move it around. I then need to margin it. We want everything to be as quick and accessible as possible. So we will be able to enable multi-currency margin mode at an account level. That means whatever is in your wallet, if we think it is usable collateral, and we talked about meme coins earlier, the value of meme coins as collateral is probably not going to be very high to start with. We're going to focus on Bitcoin, ETH, Solana, USDT, USDC. All of those coins can be used to margin a position, which means there's no friction in moving from one set of contract to the other set of contract. You can trade everything straight away as long as you have some margin in your account. And that margin will be able to support multiple trades at once. We already have that in the single margin currency spectrum, but we're going to pull that together for all coins that we support, all margin currencies we support. So we think that's a really big thing on the retail side because it makes things a lot easier. On the institutional side, there are customers who have a mandate that says, I have to hold Bitcoin or I have to hold Tether, and they can't actually convert. So that opens things up for them as well into their trading environment. So we're very excited about that. It's both a back-end challenge for our financial engineers and technical engineers, as well as a front-end challenge. How do I actually understand how much margin I've got left, how much I can trade, what contracts I can trade, where my risk is? We've done the first bit. That second bit, the understanding, is something the team are working on right now, and we're hoping to get something out by the end of October. So that's a big one, and we think it'd be game-changing for both retail and institutional. The other thing we've got, which is in beta at the moment, is trading bots. How do you keep someone trading, allow someone to trade when they're not logged in, when they're asleep? How do you not miss those market movements? And the answer is to have something automated that trades on your behalf. So we're working, again, and a lot of these things we've done this year with partners. We're working with a partner that will host trading bots for our users. Users will be able to run through a menu of different strategies. They'll be able to configure them themselves, and they'll be run through the tech of our partner, but on the BitMEX exchange to basically trade 24/7 under predetermined risk parameters. Eventually, all these things will start to combine. So the AI trading analysis will be able to recommend which trading bots would suit your trading style, would suit your trading strategy. But the first phase is really getting the trading bots out there. We'll have about 500 bots when we go to the proper launch phase, which is scheduled for early October.
Perfect. And finally, where can listeners learn more about BitMEX? I know there's bitmex.com. I believe there's BitMEX at Twitter. Are there any other locations you recommend, or maybe getting engaged with you personally online?
So, I mean, if BitMEX Twitter and BitMEX Telegram, at BitMEX Official on Telegram. For me, I am on Telegram at BitMEX_SandySam. I'm also going to be on Twitter, or X as we now call it, soon. I have a personal account, but I'll be launching an official account fairly soon, and hopefully you may have found this podcast through that link. Let's see. But so also reach out if you're already a customer of BitMEX. Our customer support team are the best in the industry, so reach out directly and they can help us.
And I do know that there are offline seminars that you guys run in like Thailand, Vietnam, South America. So if they're interested users looking to get the basics of, the BitMEX platform, the support team, and I know there's a lot of resources on there online. So everyone go engage with Sam when he gets his official Twitter, and finally with BitMEX to learn a little bit more about trading and get deep into perpetuals. But let's continue building the future of Web3, everyone.